Stock market. Find video clips of stock market, booming and crashing, and Tesla share, price jump. And what is the greater fool theory? Hi champions, today we are going to do something very different. This video is to help people just coming in stock market. Or maybe you are already into the stock market, but you need much more guidance. I hope this video helps you further. I will try my best to take your money-making skills to the next level in stock market. Intro. Hi champs. Welcome to Funding. Move on this channel, you will learn everything in a very simple and easy way about all financial issues. Subscribers will get financial education, basic courses for free, and will also learn about international politics, economies, and affairs. So press subscribe button before you miss anything. Disclaimer. Don't take this video as financial advice, but this video is for education purposes. Video content. All right. Within the 1600s, the Dutch East India Company utilized hundreds of ships to exchange gold, maslas, flavors, and silks around the globe. But running this gigantic operation wasn't cheap. In arranged to finance their costly business and trades, the company turned to private citizens. Individuals who may contribute cash to finance the trip in trade for a share of the ship's profits. This strategy allowed the company to afford more gigantic trade operations, increasing benefits for both themselves and their savvy investors. Selling these offers in coffee houses and shipping ports over the continent, the Dutch East India Company unknowingly designed the world's, to begin with, stock market. Since that point, companies have been collecting reserves from willing investors to finance all sorts of businesses. And today, the stock market has schools, careers, and indeed, entire TV channels dedicated to understanding it. But today's advanced stock market is essentially more complicated than its original incarnation. So how do companies and investors or startups use stock market today? Let's start with an example. Imagine I run a burger shop. I am doing great, but I want to grow my business more. However, opening franchises in multiple locations requires a huge investment. I tried to get a loan, but the bank said it was too risky, and they rejected my loan, so I go public and allow them to invest in my company. This is called an initial public offering, IPO. My investor pays a small amount, spouse, $100, to own a small part of my business called stocks or shares. So I sell some stocks and spend the money to open franchises in multiple places and make more profits than before. With that money, I may be able to open more franchises or put some of those profits into the development of new products. You can also return some of the profit money to my investors. This is called a dividend. I don't necessarily have to do this, but it helps people get excited about my business and buy more stock. But hi chams, this is the point where it gets fascinating. It is all about belief in the product, which motivates other investors to buy some or all of the stock from one of my earlier investors for twice the amount they paid. This guy who bought the stock from my investor plans to sell the stock at a higher price to another investor who later thinks my burger business will be an amazing success. This is the stock market. They are people who buy and sell small businesses based on what they think is worth the future. And that's happening thousands of times every second around the world. However, in case for some reason a company begins to appear less profitable, the turnaround can too happen. If investors think their stock value is aiming to decline, they'll offer their stocks with the hopes of making a profit before the company loses more value. As stocks are sold and demand for the stock goes down, the stock price falls, and with it, the company's market value. This can leave investors with huge losses, unless the company begins to see profitable again. This demand and supply are affected by multiple factors. Companies are under the unavoidable impact of market forces, such as the fluctuating price of materials, changes in production technology, and the moving costs of labor. Investors may be stressed about changes in leadership or management, bad reputation, or bigger components like modern laws and exchange policies. And of course, plenty of investors are simply ready to sell profitable stocks and pursue respective interests. All these factors cause day-to-day noise within the market. And now the important question comes. You want to buy shares, but you don't know how or where to buy. Unfortunately, you can't get into your car drive to the stock market, find a Tesla store, and buy a few Tesla stocks. That's not how it works. In fact, you can buy from someone else who owns a bunch of them already and wants to sell them. Maybe he brought them last year and the price has doubled since then, and now he wants to sell them to make a profit. Or you need the middleman who has an association with the stock markets. They are known as brokers. It can either be an individual or a firm, or indeed your nearby bank. Sometimes banks also started offering brokerage services, which traders usually don't use anyway. It's pretty much like real estate. You can't buy a house directly from the previous owner. You need somebody who is authorized to buy or sell real estate, such as a real estate specialist. So if you want to buy Tesla or Amazon or any shares from the stock market, you need to find a broker. Usually they have to get paid for their hard work for helping you to buy or sell stocks by charging you a little commission for each trade or lump sum. What are major stock exchanges in world? When you hear the word stock exchanges, these are the actual markets where company shares are traded. If someone is referring to the stock market in the U.S., they're often either talking about the NYSE on Wall Street or the NASDAQ, which stands for National Association of Securities Dealers Automated Quotations. They might also be discussing one of the major indexes, like the Dow Jones Industrial Average or the S&P 500 Index. The NYSE and NASDAQ are the biggest markets in terms of market capitalization, which means the value of a publicly traded company, and is calculated by multiplying the total number of shares by its most current share price. The top 5 stock markets in the world are NYSE, NASDAQ, Tokyo Stock Exchange, Shanghai, Stock Exchange, Hong Kong Stock Exchange. Now, since you know what exactly is a stock and how to buy one, you are probably understood also why you should buy stocks at all. I mean, why would you give the money you have earned with blood and sweat to these multi-billion-dollar corporations that make so much money that they can buy entire countries, and how usually people makes money in stock market? But here comes very important question. Why stock prices changes and how to read stocks. An important part of understanding how the stock market works is knowing how to read stocks. But if you've ever tried to read a stock table, you'll see a string of abbreviations and numbers. What do they all mean? Let's break it down. Each company has a trading symbol, which is usually abbreviated. For example, the symbol for Apple Inc. is AAPL. The first number you'll usually notice on any major financial news outlet with a stock tracker is the current price of a share. If you're looking at a stock table, it usually includes the year-to-date, YTD change. This is usually expressed as a percentage and shows how the price of a particular stock has changed since the beginning of the year. You might also find the high and low prices within the last 52 weeks and the dividend amount. A stock table or stock quote also can include the price of the last trade of the day and also the net change, which is the change between the closing price of the current day in comparison to the closing price of the prior trading day. What's more, you can research a company that's traded on the stock market in a number of ways. You can also do analysis by using candlestick line chart or many other different indicators, technical, sentimental, fundamentals analysis, which of course I will not discuss how to details of these analysis in this video, otherwise video would be too lengthy. So therefore I am making playlist of all videos like basic course. Subscribe to channel to get informed on each new video so you won't miss any chance to become kinda Warren Buffett. In the last 6 months, Tesla stock increased from around $500 to $1,500. Tesla is a great company and doing great things, and it will probably be super profitable sometime in the future. But from an investment point of view, the stock price today doesn't represent the value of the company, which means it's overvalued, which means sooner or later the price will fall to its true value. As an investor, you either want to buy stocks of companies that represent their true value or stocks that are undervalued because both will rise in the future. Of course, that's not an easy job. You have analysis companies, read their financial statements, assess their business models, and make rational decisions based on facts and numbers. There are a lot of people in our country who are traders and do this job all day long, taking out money from one share and putting it in another, taking out from one place, putting it in another, and earning profit in the process. An important question that arises is whether you should invest money in the share markets, because a lot of risk is involved in it. If you are not aware of the type of the company and its performance, the parameters of the company and its financial record, if you don't observe its history and accounting information, then you would have no idea of how the company would perform in the future. You merely listen to people saying that the company is doing well and we should invest in it in the share market. So, in my opinion, you should never directly invest in the share market and instead rely on the experts. A very competent form of it is mutual funds, because in mutual funds you don't directly decide which companies you would invest in. In mutual funds, you place your trust in experts and let the experts decide which companies to invest in. In fact, a lot of mutual funds invest in many different companies to minimize the chances of loss, or the best way is to learn by yourself before you earn. Therefore, I am making for you an absolutely free basic course, which every subscriber will get it free. Just write a comment below. Funding Move Money Stock Market Course. Well, that's a wrap for today's video, but guess what? Our journey doesn't stop here. Make sure you're subscribed to catch all the latest trading tips and strategies. We've got some awesome free courses and killer knowledge-based videos waiting for you. And hey, it won't cost you a dime. But trust me, it's gonna make a world of difference in your trading game. And hey, do us a solid, smash that like button. And if you think this could help out your trading buddies, hit that share button too. Your support means the world to us. Tell us what topic next you want us to cover, and we can't wait to catch you in our next video. Until then, happy trading.